Let's connect with Devina and understand that what she makes of the current market action and how things are moving for Indian markets. Devina, good morning. Thank you for joining us. It's been a dream summer of 2023. Is the best of this summer 2023 rally over?
Good morning, Nikunj. Before the summer started, at end of March, I had put out a tweet with no ifs, buts, if this, then that kind of thing, said very, very clearly that it was time to be back in the markets. In fact, I specifically also answered the question that is this the bottom? I said, I don't know whether it's the bottom, but it is definitely somewhere close. And the risk is of missing out an up move. I think I said it on your channel also sometime after that. And at that time the index was sub 17,000, so we've seen that moves, as you've mentioned. So as always, people tell me that tell us when to get out and when to get in, but very few people action it then, because at that time there is uncertainty and everybody wants to wait and watch, and then that that part of the move is over. But I don't think the full move is over, definitely. Even now, both for global equities and Indian equities, equity as an asset class is looking pretty good, and even relative to the globe, India is definitely one of the better markets. So I don't think the move is anywhere close to over. And again, the risk is in not being invested. Now I get people asking me that should I wait for a 10% correction before getting in, and I said there's no guarantee that you're getting that 10% correction. As of now, our systems don't show that there's going to be anything like that.
What are your systems saying, and what gives you the belief that a 10% correction is not around the corner?
There is we use a lot of systems together, which tell us that. And even if you look at simple things like PE, etc., it is not as if that you are at the extreme edge. And I think last time we spoke about, you asked me that what's going to be the theme for the next few months, and I said the crude price, which is down very significantly from last year, over I think about 35-40%, that kind of range. That's going to be one big positive if you're looking for a specific positive for both the Indian economy as well as the corporate earnings, because crude is not just crude oil, it impacts a whole lot of downstream petrochemicals, which are inputs for many industries, from FMCG, textiles, chemicals, and so on. And even other commodities are in a kind of a softer phase this year. So that helps the input prices for a lot of companies and corporate earnings. You can make a trade-off between passing on the decline in prices to the consumer and giving a boost to demand, or having the margin expand, or a combination of the two. In any case, it will be positive. So if you're looking for, though, it's not as if the market always has a one-to-one correlation with what's going to happen next quarter to earnings, and it reflects that. But as I said, overall, that picture is looking just fine.
I recall that in the month of April as well, you had spoken about how crude oil is going to be a very critical theme that will impact many sectors. And since you discussed that, I won't probe more. But I wanted to also understand what the outlook is within the entire financial space, given the fact that we do have, of course, the RBI policy, and there is that stark view with the large cap stocks that haven't quite participated in this leg up of the rally as we're making our way towards those life highs. What's your view on how one should be approaching large cap private sector financials?
I think I've spoken earlier on your channel that I am a nervous investor in banks and lenders, let us say, as a general rule. So throughout 2020 and 2021, we were not investors in banks to any significant extent. In fact, it was a risk relative to the index, because the index has such a high weightage. Middle of 2022 onwards, we became market weight on banks, so which with price action has become overweight, but not really on the non-bank financials. We will have still very small holdings in the non-bank financials, because as I said, as personally, as well as the fact that we generally prioritize risk management over everything else, that's a space we are generally not very comfortable with. So that's where we would be just now. that banks slightly overweight, but not the non-banking financials.
Let's spend some time understanding that why a correction is not around the corner. I mean, I think it's a Templeton quote which says that more money is lost in waiting for the correction when the real correction will occur. अभी 10% correction तो नहीं आएगा. So let's talk about where you can make 10% gain. Do you think this market in next 6 to 12 months can give another double-digit gain? I mean, 10% from here also.
Because I have told you before, in 30 years, I have never given an index target. And as
No, it's a stock-specific
Daniel Kahneman
target.
writes in the book, it is objective ignorance. It is something you cannot know. And so everybody making a prediction is actually just taking a punt. And I don't see anyone, at Diwali in January, everyone gives a prediction, but there are no charts showing that what is the track record of those predictions versus actuals for those particular experts for the last 5 years. If you start putting that, maybe people will stop giving the predictions on the channel. But as I said, here the risk is still is in not being invested, in missing out on up moves. I mean, in general, that's where our reading of the market is.
There is an election cycle in next 12 months. And 3-4 months ahead of the election cycle, everybody would say, okay, let's wait. What if this happens? What if that happens? What if markets do not like the verdict? Do you see this election cycle fear factor stroke suspense playing out this time around also?
Difficult to say. It's still far away. So, I mean, it also depends on where the market is then. As you said, that's like towards the end of when the elections are due. There are state elections in the middle and so on. So, I mean, that's still too far away to worry about. We normally, look at everything from scratch every quarter. So, still some time away to make a punt on that, if at all. And normally, I mean, again, markets don't make it easy that you think if this is the verdict, then this will be the market reaction. It can be quite something else, as we've seen in the past, right from 2004 onwards. The immediate reaction and the eventual reaction and so on.
Seems to be a change of heart, at least from a market standpoint, and a change of communication from promoters when it comes to consumer tech and fintech. For companies like Paytm, when they went public, the IPO prospectus was that we don't know when we will make profit. Now the same companies are ready to give a guidance that we will be profitable very soon. How do you approach this sector now? Because this is still a high growth sector. They're speaking the language what Devina Mehra likes, cash flow and profits now.
Yeah, but the cash flow and profits are still far away compared to still the valuations that they have. And I said just a while ago that for us, risk management is priority. So I mean, we are not in the business of taking punts which play out basically on luck. So we like something where there is predictability and there's enough money to be made on that. I was just looking at our small case offering, and in the last 1 year, it's up 30% as against the index being up 12 and odd. So, with a diversified portfolio with close to 30 stocks across sectors, you can make that kind of money. So I am not in the business of doing this. And again, it is just because they are off their IPO prices doesn't necessarily mean that they are great value at today's prices. Again, we are getting lost by that. So, I mean, wait and watch. Sure, let's see what happens.
Fair point. So, to your mind, which is the most overrated sector in this market and underrated sector in this market? I'm asking a very simple question.
I can tell you what we like and what we don't like. So one theme, of course, which I've spoken, I think, many times on your channel, because that has been the biggest overweight sector for us, right from now more than a year and a half, about 20 months or so, since October 21, which is capital goods and industrial machinery. And each quarter we think that is the story over, but our system still like it. We have switched stocks and so on, but the sector as a whole, we still like our systems. Like banks, as I said, we'd be somewhat overweight. What we have added in this calendar year would be autos, auto components, a few construction stocks, a few pharma stocks. IT, we we remain, I think, slightly overweight, not a hugely overweight, but slightly overweight. So that would be broadly the, and of course, yeah, not everything is a sector call. As in 2022, some of our biggest winners were ITC and Raymond's, which were not sector calls. In terms of what we don't like, you were talking of the refinery OMCs, so that sector still we don't really like. Real estate also we're generally still avoiding. Then there are some of these consumer durable paints, that kind of thing. I don't think that sector prospects are still very good. I mean, that might change as inflation comes down and all that. But for now, those would be probably the sectors that we don't particularly like.
Okay, my next question, Devina, is something which we've been, in a sense, probing and quizzing everyone on the channel. Do you think in next 4 to 5 years, there is not a strong possibility but a strong probability that the Sensex could touch 1 lakh? It is not a prediction, but purely based on maths and historical returns.
I mean, it will touch a lakh at some point. It has to, but I wouldn't like to give an exact time frame for that. And as you said, the historical returns play out over a period of time. There are, if you look at the Sensex itself, in 40 years, even if you look at each decade, the returns have been very different. The first 1980 to 1990 decade, it was 21% compounding. Then it was 14%. Then it was 17%. 10 to 20, it was only 8 and odd percent. So the variation can be quite large. Right now, we are in a good phase simply because we had that very long low return period and for a whole decade, and where we also underperformed the global markets almost every year. So we are in a better phase. As I said, India is, while global equities are themselves not looking bad at all, India is looking still definitely one of the better markets. And one of the big changes which we made in global portfolios of late has been to go overweight Japan. That's another, that's a country where we think the markets have had a turn. So it's interesting to watch the markets, but as I said, I don't make predictions on the indices.
All right, and nothing's going to change your mind either. So thank you for sharing with us at least your outlook on individual sectors and the markets as a whole. That's Devina Mehra. Just a quick check